today's episode, we talk about whether making tax digital will be a burden or advantage to landlords, some of the software landlords can use, and why landlords need to start preparing now. With our special guests, Simon and Louise Misiewicz from Optimize Accountants. Thank you so much for joining me today, Simon and Louise. It's really, really great to have you on today to talk about making tax digital. As I was saying before we got started, there's a lot of panic to landlords at the moment about this topic in particular, and also some misconceptions about it as well. So it's really great to be able to get your expertise on this. But before we get started on that, I just wanted to ask if you could just please introduce yourselves and talk about a little bit about your property journey as well.
Yeah, of course. So, Louise and I are partners in life as well as in business and investing for that matter. We've been, as a business, going since 2003 for Optimized Accountants. We've been servicing over 1,000 to 2,000 clients per year, helping them to restructure their property businesses, looking at limited company structures, which are turning to be a very popular framework right now, and trying to help them demystify what they can do with all the tax changes that we're seeing currently. And again, no doubt on the 26th of November when we have a new announcement. But in terms of property investment journey, I'll hand you over to Louise for that kind of properties that we've been investing in the past.
So our investment portfolio started, as many do, with just one or two properties, and then we got hooked and couldn't stop. So we just kept growing the portfolio, and it was everything from apartment buildings to individual family homes and to HMOs. We originally started it with an aim of learning about the industry and doing something a bit different to what we did in our day jobs, but connected to it. And it became a real passion and still is a passion.
Yeah, that's really, really great to hear about your passion for property there. And if I could be really cheeky as well and ask, how is it that you guys work together as obviously partners as well in real life as well? So how does that work as well? If that's not too
I'll take this
cheeky
one.
to ask.
Yeah. Oh, no,
No,
it's
do.
a great question. And it's something that maybe the viewers could learn from because when I first started Optimize, I always had an understanding that I couldn't necessarily work in a corporate job anymore. I had done that for a previous number of years. And I met Louise, who was equally in a corporate job working for Boots at the time. So one of the things I looked at was, well, how can we get myself out of the corporate world, and then soon enough, how could we get Louise out of the corporate world and do something together that was more interesting? And I think that was pretty much my vision to do that. And we were through property, through our accountancy business, we were able to do that. So I don't know if you can add to that.
Do you know what? It's been a fantastic journey. And I know some people say, well, I could never work with my partner. I think don't discount it until you've tried it, quite honestly. We are compatible in lots of different ways and similar in our thinking and our values, but also different enough that we bring slightly different perspectives to property portfolios, family life, as well as business life. And that really makes a massive difference. And so where Simon is the wings sometimes of the business, I'm the lead boots, and vice versa at different times. So it really works nicely. And it probably helps that we're in different departments as well. So that's always a good thing.
I mean, one thing I would just add to that is making sure that you have mutual respect for each other and just to understand that you can bring different strengths to the business, as most of our accountants do, to be fair. But I think sometimes it's easy to, when you're working on your own, to bring someone else in, a bit like joint venture partners, while they fail, is that when they bring their spouse involved, that they don't relinquish some of the controls. And I think that's where battles can have. So I think having a bit of respect as much as having a bit of fun with it really does help.
Yeah. No, that's some really, really good advice there. And I think our viewers hopefully will take that on board, particularly with the mutual respect. Now moving on to making tax digital. So for landlords that don't know, or maybe some landlords do know about it, but obviously there's a lot of panic, and as I was saying at the beginning, misconceptions about it. Would you just be able to explain what making tax digital is and how it's going to impact landlords?
Yeah, I'm going to take that one because some of the questions later on are a little bit more technical and difficult. So I'm going to let Louise handle those. So making tax digital, where did it come from? The idea of MTD was to get everyone to electronically report their finances. So MTD is the start, I think, of that, which you might see it as alongside the ID, electronic ID stuff as well. So the kind of first thing that we're going to look at with MTD, my feel, is they want you to report every quarter to HMRC. So you have to have some sort of online bookkeeping systems, which we'll touch upon later on. But on a high level, you need some sort of reporting system that goes through into HMRC and every quarter says, this is my income, this is my cost as a landlord or someone who is self-employed, sole trader, that kind of activity. So it's going to be looking at your gross income, your expenses, and then profitability. And you report that every quarter. And then at the end of the year, you make a various number of adjustments. You bring in your other forms of income, which was not previously reported, such as dividends, interest, royalties, etc. And then you compile your tax return like you would have done before, but then you submit that. But of course, the high level headlines that you might see in the press is there's a lot more work involved. And I couldn't agree more. There is 4 lots of reports to do. And if you're self-employed and you're a landlord, then unfortunately for you guys, you're going to be faced with a situation whereby you need a bookkeeping system for your sole trader self-employment activity, and then another system for your landlord rental income activities. So that's in total 8 quarterly returns plus 2 year-end adjustments plus a tax return. That's 11 submissions. So for a lot of people, there is going to be a lot of frustrations to begin with. But as life is, it's all about challenges and overcoming those with system processes and automations. And that's pretty much the sum of it. And then I'll let Louise do the more complicated bits later on.
That's very kind, thank you.
That's very welcome.
Oh, that's perfect. Well, yeah, thank you for that explanation there, Simon. And just to ask as well, sorry, quickly. So, when is Making Tax Digital actually coming in? So it's coming in next year for those earning, is it 50,000?
Shall I answer that?
Oh,
So
that'd be great.
I thought you might say that. So it's already in, quite frankly. Making tax digital for income tax is already live, but it's in a trial phase right now. So if you wanted to, and there could be some good reasons why you would want to, but if you wanted to, you could actually commence in that trial voluntarily right now. The way to work out when you're going to be compulsorily required to involve yourself in MTD is by looking at each tax return going forward from and including the 24-25 tax return, which is the one we're looking to file now with a deadline of filing no later than the 31st of Jan 2026. So if you look at your 24-25 tax return, there are 2 numbers you potentially need to add together to work out if you've triggered the threshold to be in MTD next year. The 2 numbers you're looking at is your rental income, and that's gross income, so not taking into account or reducing it with any expenses that you've incurred, so your gross rent roll, plus your gross income from any self-employment or trade activity. Now, you might only have one of those, you might have both of those, but what you're looking to do is you're looking to add those 2 numbers together if you are using both of those areas of a tax return. And if that number is above £50,000, then you are going to have to be in MTD from the 6th of April next year, 2026. Now, roll forward one more year, and that threshold now drops to 30,000. And roll forward one more year after that, and the threshold is currently set to drop to £20,000. So what you're looking at is any tax return that's due now, between now and the 31st of Jan, you're looking to see if you've hit that 50,000 limit, and if you have, and you've gone over it, MTD, I'm afraid, is definitely on your agenda from the 6th of April next year. Does that help?
That really helps. Thank you so much, Louise, for that. And as you say, that's not a lot of time for some landlords, particularly with, I mean, I know it's we're going into December, like next month, nearly Christmas, and before you know it, it will be 2026 already in April. So a lot of landlords are particularly worried about what kind of software to use for making tax digital. We particularly get a lot of comments from smaller landlords, maybe with only 1 to 3 properties. So what kind of software should these landlords be using?
Well, I'll jump on that one if that's okay. So, from a software perspective, I know that there's a big push on people using spreadsheets and then using bridging software to import information to HMRC. The nervousness I have with any type of spreadsheet is that, and here's a fun fact for everyone, is that Microsoft reported that 85% of spreadsheets contains errors. Now that's quite a large sum of spreadsheets that contain errors. And I personally used to love spreadsheets. I used to do a lot of analysis, but I started to understand that software out there that's designed specifically for what you do is often better. So for landlords, there are a plenty of software that you can look at. There's Landlord Vision, there's Hammock, there's Zero, there's Free Agent. The one thing I would say to everyone listening is don't let the cost put you off investing in one of these platforms because it can save you a ton of time. So spreadsheets, you have to manually type things in, but at some point HMRC will say to you, I need you to link a receipt against that invoice, which is going to be really tricky to do using spreadsheets, even with bridging software, where if you have a system like Hammock, Landlord Vision, Free Agent, Zero, they might supply that with you so that HMRC can easily, upon an inquiry, look into those systems without even contacting you necessarily. So those are really good things. Now, the big thing your audience is always going to say is, but the cost is going to be high. It's costing me more. The one quick takeaway I can provide to anyone listening is if you use something called Free Agent, and then coupled with a bank through NatWest, through RBS, or through Metal, which is part of NatWest. Those two connected, a bank account and Free Agent, means that you get free bookkeeping. And if you use Metal bank account, you also get free banking. So maybe, just maybe, not that MTD is a good thing in any way. I don't agree with it. But at the same time, could it help landlords move to a digital way and streamline some of their own internal processes? I believe it could.
That's really, really helpful. Thank you there, Simon. And as well about the Microsoft thing with spreadsheets as well. I did not realize that, and I don't think a lot of people would realize that either. But I suppose a lot of landlords might be saying, how user-friendly are these sites that you mentioned, like Landlord Vision, if you're not, say, a tech-savvy landlord?
Yeah, and I'll finish off with that because we are in the day and age of mobile phones. So the fact that you can now use your camera on your phone to take a picture of a receipt, and then that can interface into the bookkeeping system and automatically categorize that for you without you having to touch it, does indeed help you become a lot more slick. There's a word, slick, in your processes. So I do think that there's always going to be that time of adjustment, moving from your current manual systems, moving to that streamlined software. Now, as the Levin's change process always talks about, there's going to be denial, there's going to be anger, but actually you might come out of this process feeling really good about it because you will then start to see the benefits of these electric devices on your phones that connect into HMRC directly. So yes, there is going to be some adjustment time, but trust me, I think it will be better all around. And that's not just me trying to sell a piece of software because I'm not on commission.
Well, no, exactly as you say there. I think there is going to be a challenge at the start, obviously, but I think over time we'll see it becoming more and more, particularly with, as you say, technology is always changing all the time as well. So it'll probably become really, really clever as well. Well, I mean, ChatGPT as well is already already really
Yep.
clever, but I'm sure over time, as I said, technology will become more and more advanced. Um, And there's also a big misconception as well at the moment about, are there currently any exemptions to making tax digital? Because we've had a few, but I think a lot of landlords are confused over whether they are currently exempt from it or not.
Yeah, I'm going to put a quip and then let you do the serious bit.
No, okay.
But if you're a Jedi Knight whose religion is not to use electronic devices, then you are exempt from MTD.
I'm not sure how many Jedi Knight landlords we have,
Religion,
but
it is a religion.
who knows?
Yeah. Serious answer though.
So the serious answer is there's two kinds of exemptions. There's something called a digital exemption. I'll come back to these in a second in slightly more detail. And then there's also automatic exemptions. And the aim of the game is to find out if you're one or both of these. Now, let's go back to the first one, a digital exemption. You are digitally exempt from needing to use this new making tax digital for income tax methodology if there is a reason that you cannot use digital items. Now, that could be because of age or health or religion. Or access potentially to digital services. So if you fall into one of those brackets, you may be able to become exempt, but they are very high hurdles to jump. So what I would say is if you are thinking you might fall into one of those, you need to start the appeal process, so to speak, with HMRC now. And you can go online to HMRC or ask your accountant or tax advisor or agent to help you with that. They will help you build the appeal process letter that you'll need to send in. I don't think there is a form currently. Whether there will be in the future, I don't know. But you will then need to submit that, most likely via post, and wait for a reply. And there is no answer how long that wait will be at the moment. So that's the first one. The second reason is if you have a certain type of exemption that's automatic. Now, these types of exemptions do not require you to reach out to HMRC to ask if you fall within them. You'll kind of know whether you do or you don't. So a couple of examples just to bring them to life. There's quite a few of them, but there are a couple of examples to bring them to life. Is that if you are a trustee of a trust, then that trust is unlikely to need to do making tax digital, even if it has property income or a trade activity in it. Another example is if you are acting on behalf of a deceased individual, so you are their representative. In those kinds of instances, again, you will not need to do MTD for income tax. So there are some very specific ones that you can potentially utilise immediately without, as I say, reaching out to HMRC.
It's good that you stopped there because there's one other one that I think is worth mentioning, and that's limited companies. So limited companies are not part of making tax digital. It is only for personal self-assessment tax returns, so your own tax return, if you like. Now, one of the things that I have suggested to a few people is it might be worth, especially if you are a tradesperson, sole trader, and you've got rental income. Let's imagine that you've got £30,000 worth of rental income and £30,000 worth of self-employment or trade activity. Well, that's £60,000 gross income, which means that you are part of MTD. Now, let's imagine you decide, well, let's move some of that activity, not property necessarily, but move your self-employment trade activity into a limited company, or simply just no longer do it. Then there is an argument to be had to say, well, actually, my gross income and my personal name now is only £30,000 from rental income because I've either stopped my self-employment or I've moved it to a limited company. So that's something that people can proactively do rather than just accept the status quo.
That's really helpful. Thank you, Simon. Yeah, because I hadn't heard of that actually before that point. So that's a really good point. And thank you, Louise, for explaining there as well, because I think there is some misconceptions about it. I don't know if we have any Jedi Knight landlords that watch the channel, but there you go. If they are, then you could be exempt.
If they are,
And
I can meet them at Tatooine. It's fine.
Marvellous. Use the
perfect.
force, use the force.
Yeah.
There is one more I think it's worth just mentioning, and I'm going to bust a little bit of a myth because there's a lot of noise around this at the moment, and that is partnerships. So currently, the way that the legislation has been written, partnerships will form, most likely, part of making tax digital. But, and here's the but, it's in the future. So if you have a genuine partnership in place that happens to be trade activity or more likely property income that you're sharing with other partners of that partnership, that income does not have to be taken into account for calculating the making tax digital gross income threshold account, nor does it have to be part of MTD returns that you have to file on a quarterly basis currently. So you can pretend you don't have that when you're assessing whether you should be in MTD, and if you are in MTD, having to report.
Oh, perfect. Thank you for that, Louise. I think that's a really important point to add to that. And also as well, if there are any landlords that are watching, are there currently any penalties that we know of that if you don't do making tax digital, or is there a grace period, stuff like that?
That's a lovely question. So I'm going to jump in with that if I may. So whether or not you're a Jedi Knight, sadly, there are penalties, and the penalties fall into two categories: penalties for filing late and penalties for paying late. Now, the best way to describe the filing late penalties is to think a little bit like you would if you happen to get points on your driving license because you happen to park in the wrong place or you happen to go a little too quickly somewhere. This is exactly the same principle that's going to apply to MTD. So the moment you sign up to MTD, there's a section you have to tick, yes, I agree, which says you are signing up to a new penalty regime. You mustn't do this lightly. You really have to understand it. Sadly, for probably the majority of the audience, at some point in the next 3 years, this sign-up process is going to be compulsory for them. But they have to understand that they need to recognize there is a different kind of penalty process to the one that they maybe understood for self-assessment tax returns of old. So let's just understand a little bit more about this, penalties for filing late. The first thing to note is that if you are currently volunteering, you will not pick up any penalty points if you file the quarterly returns late. The moment you, however, move to being compulsorily included, then you will pick up penalty points for filing quarter returns late. I'll come on to what those penalty points are and how they contribute to a penalty fine in a moment. However, whether you are voluntarily involved or compulsorily involved, you will pick up penalty points when you come to filing the final year tax return if you file it late. And the deadlines for filing that tax return under MTD are exactly the same as the ones that you have right now for the classic methodology of filing tax returns. So what are those penalty points? Well, let's imagine you're now in compulsory stage. You can tot up a maximum of 3 penalty points and pick up no fine. So for example, you file late quarter 1, you file late quarter 2, you file late quarter 3, there's no penalty. If you now file late quarter 4 and pick up a 4th penalty point, when you get to 4, you incur a £200 penalty. Now, without boring you to death, if you continue to grow those penalty points by continuing to be late with further filings, whether that be the end of tax year or perhaps the next quarter filing, then you get another £200 penalty. And they continue to build in that way whilst you have 4 or more penalty points. And it takes up to 2 years to remove those penalty points, but you only get them removed if you are well behaved and you file subsequently on time every other quarterly and annual return. So there's a lot of things to think about in that process.
There is definitely, and as you say, it's just going to keep building up and building up. So I think a lot of landlords, obviously, as we've been saying, a lot of landlords need to start preparing now for making tax digital. And I like the driving analogy that you use for the driving points. I think that was actually a really good analogy for it. I suppose as well, to end to end this all off, a lot of landlords will be watching this thinking, is making tax digital ultimately going to make tax reporting easier for me, or is it going to just be an extra burden? And what do you both think about that?
I'll go next, if that's okay.
Yes.
From my perspective, we have to think about the realities. And the realities is that you do have to do your bookkeeping every quarter. So you will have to set some time aside every week or every month to get your quarterly report done. Most people, and I think there was the statistics I saw that 85 to 87% of people leave their annual self-assessment tax return until the 30th and 31st of January. Now let's imagine that 85% of people leave their tax return until the 30th of 31st of January. That's a lot of people. Now they are going to be part of MTD potentially. They can't do that anymore. So automatically where they would put things off until the last 2 days of the tax year, they're no longer able to do that. They have to be committed. They have to be organized and structurally put these receipts together in a bookkeeping system that then reports to HMRC. So from my perspective, there's going to be extra cost potentially if you use an accountant or use software. There's going to be extra time because you're going to have to put your receipts in a better structure than potentially you've done before, and then communicate with your accountant. So there's lots of things like effort that needs to go into there, which we can't dismiss. There's an emotional factor as well, because people are going to say, well, what's the benefit to me? There isn't one. I'm frustrated. That's going to be something that everyone's going to have to combat, in my view. So there's no real benefit other than, could the system help streamline some of the things that you do? Does it help in terms of tax returns and submission? I can't see how it does, in all honesty. There's no benefit to you, the individual, getting quarterly returns, because HMRC don't do anything with it anyway until the end of the year. You don't have to pay your taxes any earlier, so there's no real cash flow benefit for the government. So I can't really see what the point was. But Louise, I'm sure you've got some other things to finish off.
Well, I feel not too dissimilar to Simon. If I was Prime Minister, this would not be on my agenda, quite frankly, right now. I think a whole host of other things would be significantly more important to protecting and managing all the lovely things that need to happen in the UK right now, but that's not the case. Short term, like Simon says, it's a whole load of administration pain, frustration, and learning that some people understandably don't want to do. And we've experienced this with our clients. We've been talking to them about this now for getting on for nearly 10 months. And almost all clients understandably want to understand why this is going in and what benefit it gives them and what benefit it gives HMRC. And quite honestly, other than perhaps giving you an earlier indication of what your tax is currently shaping up to be at the end of a tax year, I really am struggling to see a genuine benefit to individuals experiencing and working through this new pain threshold, if I can call it that. The sad fact is it's not going away. It's taken them 7 years to commit to this commitment that they made all that time ago, saying that they were going to do something. And we are just going to have to grin and bear it. And as Simon says, processes will really help. Software will really help. You know, all of a sudden, the dog is now wagging the tail rather than the tail wagging the dog. But the best way to deal with this is to accept it's here and get on with it and get your systems in place as quickly as possible now.
Yeah, I want just to add to that, actually. One of the things, we're not just talking about the individuals that have to submit MTD, but Louise and I are part of the ATT, which is similar to the ACCA, ICAW, for taxation. I'm a volunteer for the ATT. And some of the comments I'm seeing back is that there's lots of, and you've been part of this with Free Agent, who did a webinar about MTD as well. And the feedback is, it's not just the individuals who got to do a tax return that's burying their heads, it's the accountants. The accountants are still sitting here saying, I hope it goes away. I hope it doesn't happen. So if you've got an accountant like that, you might find yourself in a lot of trouble, because you have to be organized, but so do they. And if I'm seeing what I'm seeing at the minute, I'm alarmed by some of the actions from general accountants. And we can already see that there's lots of accountants saying, I'm giving up. So you probably do need to reach out to your accountants, for everyone listening, just to understand where they are, what advice and support they can give you, and what do they know about MTD.
Yeah, thank you both for your opinions there, because I think, so ultimately some landlords are just going to view this as an added burden and actually be weighing up whether being a landlord is right for them. But I think if we've learned anything from this session is to definitely act now rather than leave it until the last minute and not know anything about it at all. So thank you so much, Simon and Louise, for joining me today. And thank you so much for just guiding us with your expertise on making tax digital, and I hope that landlords do find it helpful. So thank you so much for joining me.
You're very welcome. Thank you.
My pleasure.